Hello everyone and welcome back to DailyCoin YouTube channel. Today we have a different topic, which is how to trade using Fibonacci levels. Yesterday and the day before we have seen the RSI, how you can benefit from it. Today we have different indicator, and it is really important to scale up your trading skills. Let's go to the chart to start our lesson. So what is it? The Fibonacci level. What is this tool? So it looks like this, where there are many relevant levels. Okay, you can see, I will tell you how to apply it with a real example, but for now, this is the tool. It has some levels that they are really crucial that you should know about, especially the 50 and the 61.8. Okay, it's 0.61, or you can say 61.8%. So this will help you to predict when a certain correction will end. Okay, you will understand more with an example. But for now, know that this is the tool. We have these levels. You might ask why these levels are important. Based on Leonardo Fibonacci, the Italian mathematician, he discovered in the 13th century that there are certain ratio or levels that they are really important in mathematics. And now we are applying these levels in the financial market. All these technical analysts, they are really familiar with the 61.8, 50%, and they are applying it in the financial market. They started to apply these ratios in the medical and architecture industry, but now we are using it in the financial market. Let me show you how to use this tool. First, you should apply it when the market is trending. So let's say we are in an uptrend. As you can see, we have impulse correction, impulse correction. Okay, this is impulse correction, impulse correction. So when you will apply the Fibonacci level? First, when you see this series, let's say impulse correction, and then you know that most probably there will be an impulse. So what you will do and how to apply it, you will put the Fibonacci level from the beginning of the impulse until the end of this impulse. And then you will wait to see the market making a correction. So the Fibonacci, it will help you to know where most probably the market will end this correction, or where this correction might end. Usually the correction ends around the 50 and the 61.8. So it will help you to know when the correction will end, and then we will have a new impulse to the upside. So it gives you a very accurate position or level to enter the market again. So you might buy again around this level here. Okay, so it shows when the market will correct. So every time you see impulse, wait for the correction to start and then plot your Fibonacci. When you plot your Fibonacci, we have the 50 and the 61.8. They are really common levels. We will use them as support levels to know where this correction might end, and then you buy them again with a new impulse to the upside in case we were in an uptrend. Let me give you an example on what we have talked. So let's say we are in an uptrend similar to this, let's say, example here. What you can see is the market is in a clear upward movement, impulse correction, and etc. I will take this beginning of this impulse. So here we have an impulse, and then I will plot the Fibonacci. Since we are in an uptrend, I will put the 1 level to the downside and the 0 to the upside. The most common levels, as I said, the 61.8 and the 50. So I will leave the 50 and the 61.8. Okay, so this is the beginning of the impulse, beginning, and I put the 1 to the downside and 0 to the upside. So we have impulse and then a correction. Okay, if I go on the 1 hour time frame, you should be around this level here when you plot it, and then you see now we have a correction. So you will plot your Fibonacci and wait to see when this correction might end. So the most common levels are 50 and 61.8. So I will expect that the market will stop around this level. So it is a support level, and then you might buy again. And then what you will see is the market reach the 61.8 and the 50%, and most probably it will rally to the upside. Okay, so there will be nothing perfect, let's say just on the 61.8. It's fine to go below it, but as you can see now the market is rallying. Okay, this is a move of about $6,400 for BTC, or even 20%, around 20% appreciation in value. Okay, so this is how you can benefit from Fibonacci. It showed you when the correction ended. We were in an impulse correction, and then around this level here, the market rallied again. This is in case of, let's say, of an uptrend. Let me give you an example when the market retrace in a downtrend, because it is common as well in a downtrend. So here we have impulse correction, impulse correction. Okay, so if I go back in time, okay, I will put this replay here. We are in a downtrend, so now the 1 to the upside and 0 to the downside. And we have this impulse and beginning of a correction now. You can see we are in an impulse to the downside and correction to the upside. So most probably the market will retrace and halt around this level, and then it continues to the downside. Okay, now it reached the 61.8, or the range between 61.8 and the 50%. Most probably it will drop, and this is what happened. Okay, so this is another way to use the Fibonacci retracement here to the downside. Remember, you should be in a downtrend or in an uptrend. In a downtrend, you put the 1 to the upside, level 1 or 100%, and the 0 to the downside. By the way, a quick notice here, the 50 is represent the 50% of the measure from 0 to 1. So 50, this is represent 50% or half of this measure. 61.8 represent 61.8% of this whole measure from 0 to 100. Okay, and another example, you might ask why 61.8 is really important. 61.8 is called the golden ratio in this sequence of levels, because there are many examples that shows this ratio is really important. I will give you one. If you take the measure from your head to your finger and divide it by the measure of your whole body, you take any person in this world, you will get 61.8. So I will repeat, if you take the measure from the top of your head to your finger and divide it by the measure of your whole body, you will get 61.8. Anyone in this world. This is why it is called as the golden ratio, and there are many other examples. So this is it, guys, for today's video. We showed you how to benefit from Fibonacci retracement. Hope you will like it. Also, do not forget to like and share our videos and subscribe to our YouTube channel. Thanks for watching.